The reason why you lose money trading supply and demand is because you make the same 4 mistakes. And I'm going to share with you what those are and how to properly implement them on the chart so that you can start making money. I've been doing this for over 12 years, trading this exact system. I've helped many traders become consistently profitable. We're going to strictly focus on the system. We're not going to be talking about psychology or journaling or anything like that. We're going to talk about the core mechanics of the system. I appreciate if you guys like this video, subscribe, and if you have any questions, reach out to me on social media at MoneyballAustin. Let's get into it. So we're going to be looking at this. This is someone's trading stats that I've been working with for about 45 days, and after somebody has 40 trade reviews, I sit down with them one-on-one and I review all their trades together, and we figure out what a winning trade setup has in common and a losing trade. And time again, every single time I do this, they all come back to me with roughly the same results, and I'm going to break down to you what the first one is. So we're going to get into the first one. Now, all of these mistakes that we're going to be mentioning are going to be in this book, talking about the trading plan flowchart, what the setup actually looks like, how to identify good zones, trend, and assessments. This is a book. We're going to talk more about that at the end, about where you can get your own copy. But in order to understand that book, you have to understand this video. The first thing that we're going to talk about is understanding quality trade setups. Now you can see here, when he's trading a good confirmation setup versus a bad one, he has a 77% win rate versus a 56% win rate. Now, every single time I do a one-on-one, they come to me with roughly the same stats, right? The good setups are outperforming the poor setups. Now, you might be asking yourself, what is a good confirmation setup? That's a great question, all right? And so what we're going to look at is we're going to go over here to the trade review tab, and I'm just going to break down people's trade reviews about things I like and what I don't like. So we're actually going to start off by looking at a loser. Let's look at this guy's trade setup. Now, every trade setup that I end up taking as my entry time frame is going to have these 3 things. Not 2, not 1, but 3. Every single entry time frame zone is going to have these 3 things. The first thing is going to have a very strong imbalance. Okay, ideally, I want prices to have a 2-to-1 imbalance, meaning the imbalance away from the base is at least 2 times the size, okay, which you can see here. So here, this guy has a base right here. That's his drop base rally demand zone, followed by a very strong imbalance to the upside that's going over 2-to-1. The second thing I'm going to look for is a break. I'm going to go BML. Break in momentum line. This is the market changing. So in this case, we had a lower low, lower high, lower low. We could draw a downward momentum line. Notice what this zone is accomplishing. Okay, this zone is blowing past that momentum line. So it's smashing through that momentum line completely. The third thing is going to be remove, I'm going to go ROP. ROPS, removing opposing pivot point zone. So what I want to see here with this demand zone, I want to see prices blowing past these pivot points. I want to see it blowing past. I don't want to see prices just go up to here and then reverse. Okay? I want to see it blowing past clear structure. I want to see a market change in direction. So if we have lower lows and lower highs, I want to see a very strong move happening. I want all of this 2-to-1 imbalance, removing opposing pivot point zones, breaking momentum line, right? Clearly breaking all of this structure. I want this to occur within 3 candlesticks, maximum 4 candlesticks. It doesn't take 10 candlesticks. It doesn't take 12 candlesticks. It takes maximum 3, okay? Notice how this zone accomplished all that within the first 2 candlesticks. 1 candlestick, 2 candlesticks. We already broke the momentum line. We blew through past these zones. Okay, that makes a good quality zone. I like that demand zone. It's a very good zone. Not all of them are going to work. Let me share with you another example. So this is a trade from Tyson. Okay, very important. This is the most important rule to make sure that you're trading at quality zones. Here he has his demand zone. All right, what do we want to look for? Lower low, lower high, lower low. Big, strong move. This is in fact right here, same setup. It's literally drawn on the chart. If it doesn't look like that, then you don't take the damn setup, right? It is breaking this downward momentum line, taking out actual pivot point zones, and a very strong 2-to-1 move away within the first 3 candlesticks. Okay? Notice how it does all 3 within 3, maximum 4 candlesticks. An example of a bad one, let's go to this guy's trade. All right, let's go to this guy's trade. I don't mean to rip into him. We do this every Wednesday meeting, but I told him I wasn't really a big fan of this. It might have been like a break even or something like that. But this is a zone that he's trading. Personally, I don't really see a lower low, lower high pivot point structure. I think you got a decent imbalance up here. But what I really want to see is an actual change of character, right? I want to see this thing higher high, higher low, very clear momentum lines, trend lines, if you want to call them that, and then a big market shift. That's what I want to see, and then that is my zone. Okay, so this is hands down the most important thing, is making sure that you are trading at high quality zones. Okay, biggest thing, what are these zones accomplishing? You got to think about it as in these zones are coming to you with a job resume and you're looking to hire them as a zone to go off and make you money. Essentially, that's what it is. So you need to think about it as in, what are these zones bringing to the table, right? You look at the resume. Okay, it's blowing past structure. It's got very strong imbalance. Maybe it has other indicators or other technical analysis on its side. Maybe we're in an uptrend, you know? And so you have all these things that say, wow, this is a good trade setup. This is a good zone. I like it, right? Okay, perfect. You want to hire that zone as a trade. Now keep in mind, even the best hires that you think are going to be good hires, they end up being bad, and they end up, you know, being a bad hire. So it could be potentially a loss. Okay, this is the game, but that's the mindset that I want you to do. You are hiring a zone to go off and make you money, essentially. Okay. The second thing, let's talk about the second thing. Why am I holding this up? I don't know why I'm still holding it up. It is important. So the second most important thing that I want to talk to you about is, let's talk about arrivals. Arrivals is one of the most important things, because when it comes to price pulling back into my zone, what I don't want to see here, so say for example, this is a trade that we just looked at this. This is a trade that we talked about being a good setup. I like that. But I don't want to see prices coming back down into my zone and then just basing out completely before my zone. Well, that doesn't really set up to be a good setup. Now, if prices are going to hold this level, it's got to rally up and take out this opposing supply zone. So what I would prefer prices doing is, I would like to see prices come back at a steady pace back into my demand zone. That's ideally what I want to see. I don't want to see prices, say for example, go like this. I don't want to see prices go like this back into my arrival, and then I end up shorting that as my zone. I don't want to see this as price action going into my zone. So another example of this is, let's just look at a trade review. I mean, we just looked at Tyson, but he has a nice arrival. Price is coming straight back into it. Let's look at another one. So this is a good arrival. I like something like this, how prices were coming back up into it. I think that's fine. Let's look at that's a good arrival. These guys know what to look for. These guys all take good arrivals because I harp on them so much, right? So just quickly, I want prices to come back quickly rather than grinding up back into my zone. That's not something I really want to see, okay? And now probably one of the third most important things that I want to talk about is, how much time does it take prices to return back into these zones? I see a lot of time. Let me go to the charts. That people are like trading, let's say for example, like the 1 hour time frame, and then they go down to a 1 hour time frame zone, and they say, oh, this is a really good zone, right? And it's a good zone. It's a good 1 hour supply zone. And then they think, okay, I want to short here, but prices don't come back. It took about a week for prices to come back into a 1 hour zone. You need to understand how much time it takes for prices to come back is so important, because everything changes in the market altogether. Okay, so this is a 1 hour time frame zone that he's looking at potentially trading in. What I want to see is prices from here coming back up into it. I don't want to see this thing take weeks to come back, right? It's a completely different market that we're in. So that's why it's really important to understand how much time is too much time. Now, I understand you might be asking, well, how much time is too much time? Well, let me go like this, too much time. It is a very important concept. So what you see right here, let me take a photo and blow it up. What you see here, this is just me saying, this is basically what I found. I've asked many people to review this for me so I could quickly come up with stats. And we did notice a pretty big difference. And so what we noticed here was when it takes what is deemed too much time. Okay, and so if we're using the 1 minute or 5 minute time frame, I don't want to be taking trades that typically take more than 2 to 5 hours to come back into my zone. You got to understand, if you're taking a 1 minute zone, a 1 minute trade, you want prices to come back sooner rather than later, right? You don't want to take a zone that takes 24 hours to come back, right? Or 5 hours to come back, because you got to understand the people that created, say for example, this demand zone, ideally, you're probably going to be trading with the same people who are on the chart on that 1 minute zone. If it takes 5 hours and it continues to do whatever, and then eventually it comes back, well, you're in a completely different market session. You're no longer in the New York session or Asian session, right? You're trading with completely different traders. The analysis concept, the market could be completely different. So that's why it's important to understand which time frame is your entry time frame. Right, so I have it here set as if you're using the 15 minute as your entry, I wouldn't take any trades that take more than 24 hours for prices to come back. If I'm using like the 1 hour time frame as my entry time frame, then I won't take a trade that takes maybe more than 24 hours to come back, right? Maybe maximum 48, right? So that's a really important concept to come back to. And in fact, if we look here on the trading stats, time of arrival, he says here, well, it's much better when it comes back sooner rather than later, right? So it's 83% win rate versus 57% win rate. And going back to that arrival, you can even see here 85% arrival versus poor arrival, 46% win rate, right? So very, very important to understand, a quality setup, clean arrivals, and how much time it takes prices to come back into the zone. Really important concept. The next concept I want to talk about is understanding trends, okay? And this is going to be covered here in the book that I have for you, talking about trends, okay? How to determine an uptrend, downtrend, because statistically it is a big difference between our winners and our losers when we're trading with the trend versus counter trend, okay? And I'm actually going to spin this off into understanding market conditions. But before we get into that, we can see here trending 63%, counter trend 58%. Okay, so he clearly trades better trading in a sideways market or with the trend, which is understandable. Okay, but what you need to understand is what is also the market condition behind this. Okay, because if we look at gold, let's look at gold on the daily time frame. I see people go to the charts and they think, oh, I'm going to be super mechanical. You need to understand what market condition that you're in, okay? So if you look at gold, year to date, starting in 2025, this is what the daily picture of gold looks like. It's a very bullish market, okay? Very bullish market. Versus, we go to the ES, the S&P. What do we see here? Going back from, let's delete this so it doesn't confuse you guys. From the start of 2025, it's a very choppy, range-bound market with prices selling off completely over the last 2 weeks. Okay, completely different than gold. Versus crude oil, look at crude oil. No, it's CL. CL. What is crude oil doing? Year to date, let's delete this. Year to date, completely selling off. So it's important that you understand what market condition that you're in and adjust your trading okay? Because I know some people trade really well in trending markets versus counter trend markets. If you, in fact, because the markets are always changing, you got to understand we have a different president right now, and that's changing the markets. If Kamala Harris won, the markets would be completely different than with Donald Trump won. So if we actually look at gold here on a 30-minute time frame, over the last 3 days, we're very range-bound market. You cannot trade the same of gold this week versus the previous week where it was more trending to the upside. And then you go 1 week before that, look at this, very trendy to the downside. And then you go 1 week before that, look at that, nothing but range bound for 1 week. Okay, this is basically just marking off the sessions. That's the indicator I have on my chart. The blue is for like US session, the yellow is the Asian session, and then the green is the London session. Okay, but you can see here it goes sideways for 1 week. The next week it's downtrend, half a week it's uptrend, and now it's in a sideways market for this entire week so far. So you got to understand the markets are always changing. So you can't come to the market with the same top-down analysis every single time. You have to be willing to adapt, change your take profit, change your entries, change your style, right? And if you're somebody that doesn't perform well in a sideways market, then you need to stick to trendy markets, okay? So I'm actually going to talk on my next point here. Very important that you understand market conditions. Is just as important, understand what markets you trade well. So this is something, oops, I get people to do. It's loading. There we go. This is something I do is I get traders to look at, I tell them to experiment with different markets because you need to find what markets you trade really well versus you don't trade well. And so early on, I tell people, I want you to trade the 4 different setups that we trade. I want you to take as many trades as you can. I want you to trade different markets because I want you to feel the setup. I want you to understand the system, but I want you to see what markets you like and what you don't like. And when we look at this guy's trades, this guy trades the Dow Jones a lot better than maybe the Russell or maybe the NQ, right? You got to understand every market is different altogether. And maybe someone like myself, gold, I trade gold a lot better than, say, for example, NQ. Like NQ, I actually have it right here. This is why it's so important. Check this, like this. This is why journaling and reviewing is important. Gold, 58% win rate versus I look at the NQ, 20% win rate, the NASDAQ. So why am I trading the NASDAQ, okay? Versus somebody else maybe trades the NASDAQ extremely well, okay? So maybe they should be focused on trading the NASDAQ if they trade the NASDAQ really well. Versus me, I like gold. I think it's a great market. So that's why I maybe prioritize it, and that's why I have a better feel for it, and that's why I can better trade it, right? But you have to be aware of what markets you see very well, but also, the current market condition that it's in, okay? So let's continue with this. And, everyone's going to be different on that, but I did want to make sure I cover that in this video, okay? So we're going to continue to talk about certain things. And it's actually the same thing talking about, I think this is actually a conversation we had this week. This guy Vanes, he said he switched to swing trading and he's getting much better results. He says here, over the last couple of years, I've not been the biggest fan of long-term swing trading. I tried the 5-minute time frame and he really liked it, but he had no success. So until he started switching to the 1-hour time frame, where he holds trades for maybe 1 to 3 days, he's gotten a lot better at trading and has had positive results, right? It helps him with over trading, and he can step back from the charts altogether. And he gets better results. So a lot of people do better with, intraday or short-term swing trading, right? Versus scalping, especially this generation. I feel like this generation is so freaking retarded. They got to have their attention span for every 5 seconds. But hey, that's them. They're cooked completely, as the saying goes in that generation saying. Are you cooked or not? Okay, so let's continue. Another thing I wanted to talk about is, I don't want to talk about different setups because that's going to be covered in the book for you guys. I want to quickly talk about different, patterns right now, really quickly. Now, what I've noticed is I'm actually going to go into, this guy has better results trading reversal patterns, so drop-based rally patterns and rally-based drop patterns versus continuation patterns. And now I would say 80% of the time traders come back to me with the same results. And what we noticed here, what that basically looks like so that you guys can see it on a chart. This is an example of a drop-based rally. You guys should know it's going to be in the book for you guys. This is a drop-based rally pattern. This is a reversal, drop-based rally, right? Most of the trades that we've looked at today so far have all been reversal patterns. These have the best quality trade setups. Like, you're going to have the higher win percentage trading at those patterns versus, say, for example, this is the trade that I took this week, which was this trade, a continuation pattern, was this little rally-based rally pattern. This zone still strong and balance, taking out pivot point zones, breaking downward momentum line like we just talked about, right? But instead of the setup looking like this, the setup is going to look like maybe like this, like that. You know what I mean? Instead of getting the drop-based rally, you'd be taking the rally-based rally, right? And so statistically, you're going to have better success trading the reversal patterns, whether that's a drop-based rally or a rally-based drop. All right, it's the same setup as in reversal setups versus the continuation patterns. But once again, it's covered in the book, okay? But the thing is, when people struggle with trying to implement this, that's going to be the biggest problem. Is I can tell you all this stuff until you start putting in the work, journaling, reviewing, that's when you're going to start seeing the results. And people have trouble actually implementing it. I'll say it time and time again, the same stuff, but it's until they see it for their own eyes. Or what you see here is they share their trade reviews and then I go over them and I say, hey, I really like what you did here, but I don't like this. And for this reason, like I'm sharing with you guys right now, and here are the stats, this is why I don't recommend it, right? And once they have 40 trade reviews, I then sit down with them and I say, hey, let's break down your trading stats. Let's figure out what you like about the system, what you don't like, and then let's create your own trading plan, right? And they need that direct coach, and they notice the same things. I think that's a big problem when people go off and watch these videos. You're only going to see the highlights of how to trade a strategy or 90% win rate with 10-to-1 reward to risk. It's all just marketing. It's a big scam. Where you're really going to see growth is when you're working directly with a coach. That's what goes on in the Moneyball trading program. So this is the book that you guys will be getting. If you guys want to check it out, it's going to be highlighting quickly over my trading strategy. You can get this as well as, you know, the trading plan flow chart and different setups, talking about the top 5 mistakes that you're making in your trading and how to overcome them. So if you're struggling in your trading, check it out. It will be in the link below in the description, moneyballtrading.com. And that's where you can also look at joining the Moneyball Trading Program, and we can start working directly one-on-one together. Okay, I appreciate if you guys liked the video, subscribe. You guys can always reach out to me on social media at MoneyballAustin. And if you want to see my trading strategy in 30 minutes or less, click the video above my head right now. I'll see you in the next one. Cheers. Bye-bye.